Thanks. Mr. Speaker Pro Tem, I'm going to try to do this somewhat quickly because it's a couple of fairly simple concepts. Look, almost every week when we're in session for a decade, I've come behind this microphone and tried to help people understand the fiscal situation in the United States. And some of the math is both hopeful and incredibly frustrating. So think about this. Our tax collections are up almost 10%. Almost 10% tax collections up in the last 12 months. Yet, over the last 12 months, we've borrowed $2.34 trillion. That's $2,346 billion. We're borrowing right now, if you take the last 12 months, $74,000 every second. And you go, but how can that possibly be? Tax receipts are up. Our problem is fairly simple. Refinancing the debt. We have to bring about $11 trillion to market over this 12-month period. And much of that is debt that was sold a few years ago when interest rates were very, very, very low. So it's getting refinanced at today's rates. The other thing that I talk about constantly because it's my intense frustration around here is the Democrats, and I'm sorry, many of my Republicans have turned health care into financial engineering instead of what does it cost to provide services? What does it cost to help our brothers and sisters be healthy? And we're actually seeing, we had some projections from CBO and others of about a 5% growth in spending on health care. And I'm going to show some of this. And we're seeing some numbers coming in that are closer to 8-9% growth in that spending. So interest in health care, and look, much of it's demographics. Remember, in about less than 3 years, over half the federal spending will go to those 65 and up. It's substantially because of a couple things. We got older as a population. We've gone 30, 40 years with falling fertility rates. Remember, we're well below replacement rates in the number of children we have. There's math that last year and this year were pretty much flat population growth. And then there's this, trying to help folks understand the reality of what your federal government is. You see the blue area? This is defense and non-defense. And in a couple days, we're actually going to get an update. And my team actually thinks this number will go from 26% of being what we call discretionary to maybe down to 25%. That's 1/4. Every dime of this is borrowed, and that's all members of Congress actually vote on. The rest of this, whether it be interest or Social Security or Medicare or Medicaid or other mandatory spendings, all that red is on autopilot. It's a formula. And if you add this up, basically, that's under $2 trillion, and I just told you we've borrowed over 2.3 in the last 12 months, meaning every dime of this is borrowed and a chunk of mandatory is borrowed. That's our reality. Your government is basically an insurance company with an army, paying out a lot of annuities. It's demographics. And yet much of the craziness you hear behind these microphones is anything they can say to keep you from focusing on the fiscal reality of what's going on in our country. And look, we've been trying to figure out how to express some of this, so I'm going to do it in a couple different ways. So over the last 12 months, receipts have grown 10%. Spending's up 4%. Okay, you go, well, shouldn't we be closing the gap? Except the problem is the spending last year over $7 trillion, where tax receipts were like $5 trillion. So do the 4% growth over here, the 4% growth on spending, the 10% growth on taxes, you still have closing of the gap maybe $250 billion. It's wonderful. But if you're heading towards a $7.4 trillion spending, that's less than 1 month of borrowing. You've got to understand, we're basically in the 4th month. We just finished the 4th month of this new fiscal year, and we've already borrowed, since October 1st, $926,724,000,000. Meaning, in the next couple weeks, depending on how much cash the Treasury decides to keep on the balance sheets, we're going to hit $1 trillion. This was supposed to be a year where we would start seeing the debt starting to go down. Now, my joint economic economist, I'm blessed. I chair the Joint Economic Committee. I'm number 4 in Ways and Means. I chair oversight there. My job is to get the math right. And we always said we thought this would be a $2 trillion borrow year. Tax receipts up, but spending's up substantially, once again, because of the financing of $38.5 trillion of U.S. sovereigns, 10 trillion of it having to be refinanced this year, 2 trillion virgin, meaning it's new borrowing, and healthcare costs. So when we bring these charts in, it's one of the classic problems of when you do this, saying, well, look at this. You know, tax receipts are way up, but the tax receipts and spending are upside down. One's based on $7+ trillion, the other's based on $5 trillion, meaning that gap is not nearly as tight as you think it is. And I'm going to pass through some of these. Now, part of the great battle is, and if you ever have a curiosity, and Chip was basically teasing for the 14 people that watch C-SPAN. Sometimes I'm worried there's not even 14. But if you really care about saving the republic, I would argue what takes us down is potentially the bond market. If we keep borrowing like this, the bond market is going to start running this country. Go to the Joint Economic Committee Republicans website. We put out some amazing data, and we're trying to make it easier to absorb. We're doing better with charts and graphs. But another thing we do is every workday, we send out a text message. We call it the daily debt, Schweikert's daily debt. And it basically does this math for you. It tells you, here's what we've borrowed over the last 12 months, and here's what we've borrowed this fiscal year. And the beauty of this is you can say, okay, over the last 12 months, hey, we're borrowing $74,400 every second. So far this fiscal year, so 4 months in, we're borrowing $85,000 every second. Start telling the truth about the math and understand so often the theatrics you see here in Congress are so we can give you a dopamine hit, but we don't have to deal with these numbers because these numbers are difficult, complex, really hard to explain, and the armies of lobbyists and people in our hallways here, Mr. Speaker, what do they do when they get to our office? They don't walk in the door and say, we really want you to save the future generation, spend less money. Everyone's at our door either wanting money or wanting us to regulate their competition. And that's bureaucracies, that's businesses, that's private groups, charities, give us more money, or create a barrier to entry so I don't have to compete with someone else with better, faster, cheaper technology. And that's particularly true in healthcare. We've done presentation after presentation here showing how you could crash the price of healthcare, legalizing technology. And even today, he's my friend. And I had a little bit of a verbal kerfuffle, love that word, with a member who's a doctor. And he despised the concept that, but I was showing him part of the paper that says, if you have this sort of data coming off your body, whether it's be the Oura Ring, whether the Whoop, the Apple Watch, the things you can wear, the data from it using the latest AI packages is statistically more accurate than a human. Why wouldn't you legalize that to help people keep healthy? Well, turns out when you tell a medical professional that, they get a little cranky at you because it's always about the money here. And look, this chart in many ways you can find on the Joint Economic Committee, but I'm trying to actually show what's happening as we're refinancing our debt. We're having to spend a lot more money. We calculate that just interest this year, Mr. Speaker, will be probably about $1.2 trillion. So think about this hierarchy. Let's do this together. Social Security, $1.5 trillion, $1.5 trillion, $5. Interest, 1.2 trillion. Medicare, maybe 1.1 trillion. Medicaid and Obama subsidies, almost another 900 billion. Defense is actually the 5th in our hierarchy of spending. The thing that's actually in the Constitution now is number 5. So when you get these folks that walk in the door, just stop spending money, balance the budget tomorrow. I can do it. Except you'd have to get rid of every bit of government, every bit of defense, and then you tell me about the $600 billion you want me to remove from Medicare, Social Security, military pensions. What do you want to do? And that's the reality. Just interest this year will be 3%, maybe even higher, of GDP. So when you see us talk about we want to get the debt down to just 3% of GDP, that just covers our interest carry. So let's see. I have a couple of these other charts I sort of want to walk through. Mr. Speaker, may I ask how much time I have left?
The gentleman has 10 minutes remaining.
Excellent. If I do this quickly, and I apologize for talking so fast, I've had a lot of coffee today. I'm trying to detox. Oh, look, something almost no one around here pays attention to, but it's my job on Ways and Means and my job with the Joint Economic Committee to talk about the financing. How do you have a country that if we're going to burn $2+ trillion this year, that means you're bringing at least $250 billion to market every month. Yesterday, and the day before that, and the day before that, and the day before that, we had to borrow about $7.3 billion that day. $7 billion a day. That's so far this fiscal year. If you do it over the last 12 months, it's almost $6.5 billion a day is what we borrow. You don't need to actually pay as real detailed in this, but what I'm trying to show is the average maturities on our bonds and that they have to be refinanced, and every quarter this is what's coming to market. And the fact that we're moving away from much lower interest rates to much higher interest rates. But there's other things going on. Do you remember how often, and Mr. Speaker, you've probably had this, this experience. You're at a town hall, and someone says, how much do foreigners own of our debt? And now you try to explain that China is actually, I think, down from like 1.2 trillion down to in the 700 billion, and maybe now third. Japan is number 1. But there was a certain things that happened when central banks were buying U.S. debt. There was a level of stability that came with this. And this is an interesting concept, and some of the bond market folks are starting to write about this. They held it because they needed an offset for their currency. They needed it for trade. They wanted just stability. As foreign governments and foreign central banks are getting rid of U.S. debt, bond markets, hedge funds, others are the ones buying it. Okay, wonderful. We have people buying our debt. But do you see the problem? These are traders. These are folks that if there's a carry trade, if there's an opportunity to make a spread, if there's an arbitrage, they sell it. And you're starting to see, if you actually look at, there's actually a thing called a bond VIX. It's the volatility index. We're starting to see much more volatility in U.S. debt. That actually scares me. You want stability. You want the markets to believe in us. You want the markets to understand we're going to get our act together. We are credit worthy. Yet, Greece today can sell a 10-year bond cheaper than the United States. In many ways, I can think of 12, 13 countries that today, if they offer a 10-year bond, that 10-year bond goes out at a lower interest rate than the United States. Does that bother anyone? Does that tell anyone anything? Does anyone listening? Look, I have chart after chart after chart. There are ways we can communicate to the bond markets that we're taking our debt seriously. There's ways where we can protect Medicare and Social Security, but we got to tell the truth about them. Right now, the Social Security Trust Fund is empty in 6.5 years. That means 7 years from now, if you're on Social Security, if we follow the law as it is today and Congress continues to fail to act, you get a 24% cut. Our model says we double senior poverty in 7 years. We will double the number of baby boomers that live on the street. In 6.5 years, the Medicare Trust Fund is empty. Your hospital, others get an 11% cut. That's our model right now. And you start to say, okay, how do we preserve these programs? Well, maybe we could actually take on the things we know are going on. And next week, Mr. Speaker, I'm going to try something. It's probably politically crazy, but we're going to walk through the financing of Medicare next week. I'm going to walk through how it actually works, because some people think the Magic Trust Fund pays for everything. The general fund, which is all borrowed here, pays for about 40% of it. There's a conversations even with my brothers and sisters here, even with some of the staff, not understanding the complexity. So once again, Social Security Trust Fund empty in 6.5 years. Medicare Trust Fund empty in 6.5 years. We go from $1 trillion last year in Medicare spending to $2 trillion in 7 years. It's demographics. It's baby boomers. Hell, I'm one of them. I'm just on the younger side. And look, I'm crazy. I'm 63, my wife's 63, and I have a 3-year-old and a 10-year-old we've adopted. That's being optimistic about the future. We need a society to get this to work. But we have a paper in our office that was written by a bunch of freaky smart economists out of Cambridge and Boston saying if you use a 6% generational discount rate, and I said this last week, but I'm trying to get it to burn into people's psyche. A baby born today, you need 104% of that child's lifetime income just to pay government pensions. Federal government, not state, just federal government. Does anyone see the immorality? The craziness that's going on? And we're all terrified to tell the truth about this because we make our voters mad, because partially the political class has lied to the voters for so many years about our finances. But we're going to come back and start to walk through the math of, you've seen some of the proposals on Medicare Advantage. Now, the White House now is coming back and saying they're going to just cap the growth. And you saw many of these insurance companies, Medicare Advantage companies, their stocks just crater. We believe we have a much more elegant solution, and actually may come in at much bigger savings, is realign the incentives. I love Medicare Advantage. It's 55% of our brothers and sisters who are on Medicare use Medicare Advantage. But the incentive for the insurance company that's managing it should be not trying to constantly build risk models to raise the cost to get in more cash. How about we do this? Get rid of the risk adjustments, get rid of the star rating, and just do something very simple. Give us a bid, and you make money by helping those you're insuring be healthier. It's a crazy concept, but that was the basic concept of a capitated model was, hey, these insurers will profit by doing their job well. And you got to put in protection so it's not denial of services, not denial of access to pharmaceuticals. But if you fix those things, there's models around the country that have worked amazingly well. Now, sometimes you got to have a discussion. It may have to be more than 1 year. You may have to have 3 years with opt-outs if you don't like your insurer. But so they'll invest in you to be healthier. Maybe even buy you the technology, buy you the things to do that and make a profit. We're right now going to have to make a decision as a body. Are we going to go into the command and control and try to starve the beast? Are we going to build a model that incentivizes doing it better, faster, cheaper, and in this case, much, much healthier? And look, we're looking at right now over $2.5 trillion over the next 10 years of just Medicare. will be financed with debt. Just debt. Now add in what's left in the trust fund, add in what's coming out of your payroll taxes. I know it's political suicide around here to tell the truth about programs like this, but if you want it to survive, we just get the math right. I can make it work. It's not going to make some people completely happy, but we can make the math work. But you first have to accept the fact there's a problem. We got a big problem. Next week, Mr. Speaker, I'm going to come back and we're just going to walk through the opportunity of how we preserve these programs using a calculator. And I know Congress is often a math-free zone, but let's give it a try. And with that, Mr. Speaker, I yield back.
Does the gentleman have a motion?
Mr. Speaker, I move that the House stand adjourned.
The question.